Welcome to today's video. I am Ronica Brown, and today I want to talk about tax incentives slash tax loopholes. They're basically ways that business owners or taxpayers can can lower their taxes as much as possible. So I want to go ahead and share 5 with you today, and these are pretty much the top 5 that I worked with in 2019, and there are a lot more of these things on the market. The thing is, you should just be able to work with someone who knows about them, so that you as a business owner or a taxpayer will benefit. And the reason why I know about these incentives is because I spent pretty much most of my tax career working with Fortune 100 companies, and I fell in love with taxes because when I went to work, pretty much I hated tax in college. I made a C on in my first tax class and I was like bawling all over campus. But anyways, I retook that class and made an A. But pretty much, I really didn't like taxes. I didn't think that I was going to work in taxes, but I went to work my first job out of college in a Fortune 100 company tax department, and my mind was pretty much blown with the things that they were doing in order to save money on taxes, tax planning. It was amazing. All the strategies, all the things, all the opportunities that are there, it pretty much blew my mind. And this is the reason why I'm still in taxes. Now that I own my own practice, I pretty much spend a lot of my time connecting with people who specialize in certain areas of the tax code that I don't know about. I go to a lot of tax conferences, like the biggest tax planning conference happens in San Diego every year, where there are people that do all sort of amazing things, firms that does all sort of amazing things that come together and basically to see how they can help their clients, from CPAs, financial planners, tax attorneys. That's where they go every year so that they can get an update on what are some of the amazing things that are on the market that their clients are paying, that their client can use to save money on taxes. And pretty much, a lot of these companies, they work with a lot of people that you have to have like $5 million or more in order to play, right? You have to pay to play, but there are other things that are on the market for people that don't have $5 million sitting in their bank account to do in order to save money on taxes. So for anyone that's a bit confused as far as are some of these things, how come they don't hear about these things and so forth. So there are 3 ways that how tax incentives gets created pretty much. So first is either there's a change in the tax code, like in 2017, effective 2018, there was a major revamp of the tax law, and new deductions got created, deductions got taken away. But one of the big tax incentives was, you hear for the corporations that now they're going to pay so much less in taxes because the corporate tax rate dropped to 21%, which a lot of the large corporation benefit. A lot of smaller business owners, mid-sized companies, they're not really C corporations, so they didn't see that big of a benefit. Where they benefited was from what they call the qualified business deduction. That means if you have a profitable business, the first 20% of your business profit, you pretty much get to don't pay tax on it, or you get to deduct it. So that's one way how people get tax incentives, is if there is a tax when they basically have a new tax law, which pretty much what happened in 2018. The second way how people can get tax incentive is the way that I really like, is tax loopholes. And this is basically a deficiency in the tax law. The IRS knows that it exists, Congress knows that it exists. It's basically a weakness in the law that pretty much you're able to take advantage of just because because it's just there, and you can find a way around it. The third way how tax incentives get created is basically if the government want to incentivize certain industries to grow. Like, for instance, there's a film tax credit for the film industry. If they go into certain states and so forth, there's a tax credit that they get to pass to, to taxpayers, individuals, business owners, yada, yada, yada. Or, for instance, there's, what the heck is it called? There's a research and development credit, and they basically change it to make it targeted to the new tech industries, where they're getting a lot of venture funding, they're hiring a lot of people to work on development and so forth. So they gave them the research and development credit. So even though these companies their product is not at market yet, that they're not making revenue, the government wants to continue to have technology growth and innovation in the country. So they basically gave them a credit to offset some of the taxes that they're going to pay on basically their payroll taxes that they have to pay their developers and the employees that they hire. Because a lot of time, even though tech companies, they're not making any revenue, they have a lot of cash from venture funding and so forth to pay employees to continue working on the product. So those are the three ways how tax incentives gets created. So regardless of how it gets created, the thing is, you just need to have them in your business so that you can basically save money on taxes. And the 5 that I'm going to share with you today, and the first one I'm going to talk about is the retraining credit. So this is more on the state side, and for business owners who have employees, this credit is so easy to get because of technology. So what it basically says that if you're retraining your employees, you're going to get a tax credit for it. Retraining can be simple as an app update that a business uses. It could be an update to MailChimp or something like that. It could be them trying to use a new tool. So a lot of companies such as marketing agencies, they benefit from marketing agency, they can see a huge benefit from this just because, they're using all these tools to do ads and all these things for their clients. But a lot of other companies, accountants, attorneys can also benefit from it. The thing is, you just have to have employees. So that's a retraining credit, and pretty much every state has this credit. It's here in Georgia. I do a lot of them. I necessarily don't do it myself, but we get a lot of retraining credits for clients that have employees, so they're able to benefit from that credit. The second incentive I want to talk about that's on the market is basically investing in solar energy. So this is not you going out and buying solar panels to put on your house. This is not what it is. It's basically, if you owe a certain amount in taxes, let's say $50,000, instead of paying that money, instead of sending that money to the IRS, what you can do is pretty much invest in a solar company. So it's basically you buying stock, similar to you buying stock in a company, and what you get is basically what you get is a return on your investment. When you pay taxes, you don't get a return on you don't get a return on your tax dollars. The money just goes. So it's incentives that these companies, that IRS gives these companies to pass their savings on to taxpayers. So the solar company are basically selling their tax incentive to taxpayer because the government wants solar energy to grow. Congress and the IRS wants solar companies to grow. So what they do is they give them these incentives, and in return they basically sell these incentives to taxpayer. So what's in this for you? You basically don't pay, you basically get to wipe your taxes out, don't pay any, or you may have to pay a little based on your income and all those other factors. And then you also get a return on your investment. So that's super awesome. The next one that let me take a look at my list. The next one I want to talk about is pretty much, yes, hire your child. So this one falls into the loophole category. So if you have a family, if you have a family, you have children, there are different ways how to do this. There are different roles that the child can play in your business, and this works, you know, because the child does not have to pay taxes on the income that you pay them. So this is basically moving money from your business to your child. The maximum per child is basically $12,000. I've done a ton of these for the past 2 years. Hire your child. If you look on my Facebook page, I did a post about business use of car, and my toddler was like in front of a steering wheel of a car. That's an example of hiring your child, where he was pretty much the custom model for my business marketing post, right? So that's one example, and you know, pretty much it's as I said, that the maximum per child is, you know, $12,000 that the child doesn't have to pay taxes on. You don't have to pay taxes on it. So that's pretty much an additional way to move additional cash out of your business. It doesn't really matter once the money get moved what you do with it. It really doesn't matter. The next one that is available for you to do is it doesn't really have an official name. It's basically an investment in mineral. What happens is, you know, there are companies out there that owns mineralized land, and basically if they're able to get this qualified as a land that can be conserved or something like that, then what they do, they donate the land to a land trust, because you know, they really don't want to go out there and develop mineral land. So they donate the land to the land trust and basically get a massive deduction for donation. So these companies go out there and sell this deduction to taxpayers. So it's basically you exchanging tax dollars for deductions, and basically this one you're able to at least cut your taxes in half. So if you owe $50,000, then you pretty much only pay $25,000 because you have this incentive. So you basically it costs you pretty much just only $25,000, even though you've owed $50,000 in taxes. So you know, that's, you know, a big return that you get. The next one that I'm going to talk about is it's called premium financing. And normally in the past, you know, when you hear about this, is normally for people that are super high net worth, that, you know, they want to move $10 million, they want to move, you know, $20 million. So this was like super high net worth. But, you know, there are programs out there that can get it down to, you know, the $20,000, $25,000, $100,000 a year for taxpayer who, you know, so this is normally people do it when they have a large increase in income for a year. Like, for example, I don't have an example. I can't think of one right now. For example, maybe you get a large, your business just all of a sudden start growing, or if you're an attorney, you settle a large case and get a large payout. So normally this works best when there is when you have pretty much a large increase in income in 1 year, then you're able to take advantage of this. And as I said, that there are a lot of other things like this that are on the market that pretty much what you can see, that a lot of these incentives that I talk about, you don't have to spend all of your money. If there's money that's spent, that money is coming back to you, and that's the best way to get tax-free wealth. That's the way to do it in America, not spending all your money, not going out there buying a bunch of equipment that you don't need, not just frivolously spending your money just because you think you're going to get a tax deduction. These are like ways that you're thinking about, that you have a wealth building mindset that you have a financial goal. So people that have these things, you know, they're thinking about more long-term wealth, they're thinking about making their money work for them, they're thinking about how to keep more money, they're thinking about how to basically maximize how much cash they have, gets the best use of how much cash your business is making. Those are the people who basically benefit most from these incentives. But that's it for today. If you're interested in hearing more about these incentives or anything else that you may qualify for, you can send me a message. Let me know if you like this training. Thanks.